When you realised last year, I suppose, after Lehman's collapse, that the market was at a tipping point, what did you do to the portfolio?
Well, AFIC's investment approach is to buy and hold for the long term, so we tend to hold all the way through the process the stocks that we want to continue with, the ones we think will survive. This was such a dramatic change in circumstances that we did actually undertake a review of all of the companies in the portfolio, and we said, now which of the ones that may not come out of this in good shape or may not be able to provide us the dividend flows that we want. So we did cull things like Connect East, Suncorp, Medway, companies like that that we felt were not ones for our long-term portfolio.
Ross, in the past there have been long periods where the market has basically flatlined, even though there's been quite a lot of volatility in between. Do you see that occurring over the next few years?
Well, yeah, that's an interesting question. I think it's probably likely because we've had such a jolt to the economic system, and some commentators are saying, well, we've had 18 years of really sustained growth in the economy. We're moving into an environment now where we might have more frequent ups and downs, and in that sort of environment, I think you find the market could well sideline.
As this global economic crisis stabilises, there is going to be a lot of public sector debt around the globe.
Absolutely.
What are the implications of that for the market?
Well, that in fact is one of the things that's on our radar screens as things to be concerned about, because there's a huge tsunami of public sector debt coming all around the world, and that inevitably affects interest rates unless they print money, and that's even worse. So I think our view would be quite a bit of caution around that, and the fact that in due course interest rates will have to rise as that debt funding requirement has to be satisfied by the market.